Hello, everyone. It is such a pleasure to be here, and I've been really looking forward to this panel. We have a very exciting conversation coming up. I would like to introduce everyone, Ms. Corine Kiame, the president of the Lebanese League for Women in Business. Corine, for those who don't know, has overseen the largest investment portfolios in the region, managing over $79 million in early stage capital at IM Capital, and she's now leading the Lebanese League for Women in Business. Corine holds... Corine holds advanced finance and venture capital degrees from Paris Dauphine, Harvard, and MIT. She's also a founding member of the Cedars Lebanese Women Angel Fund Business Angels Group and is an advisor to the board of directors at UZEC. Corine, I will start with you to tell us more about your journey and especially your shift from VC to the NGO world.
I did not shift. I just carry, I did not shift at all. I just carry two hats now. So my professional hat remains private equity and venture capital, and my heart, so the impact part, is LLWB. So for those who don't know, LLWB stands for the Lebanese League for Women in Business. In Arabic, we say الرابطة اللبنانية لسيدات العمل, مش سيدات الأعمال. So we are not a CEO organization. We just represent the women of Lebanon. Total of 860 members, 4 chapters spread between Beirut, Trablus, Be'a, and whatever is left of our dear south. So today, our main job is women economic empowerment. So it's supporting and empowering specifically women in business. And we do that over 4 pillars. The first one is training. So we do physical training, capacity building, and online. 2 would be access to business network, which is a main focus on entrepreneurship, which is today the alternative to creating jobs. So it entails access to finance and access to market. Community building, obviously. So we do a lot of events for the people to meet among each other and for peer-to-peer building. And by the way, all our events are a mix of women and men. Everyone thinks that we're just a women association, not at all. So today we talk about diversity more than anything else. And our 4th pillar, which is advocacy, which is what we do very strongly. So today we're advocating for a 30% quota for women representation on board of director in private institution. So we conduct research, obviously, before we do any of those topics. And I have to tell you probably just 2 numbers for you to know. So we're working on quota. Wallah al-azim, we believe in merit, really. But if I want to give you, the numbers of Lebanon since 1950 till 2024. So I'm going to start with the Beirut Stock Exchange. Today, on the Beirut Stock Exchange, we only have 9 listed companies. Only 3 of them have women representation. So out of the 63 seats available, only 4 belong to women. So we are at 6.3%, which is drastic versus the 20 and the 40% that we see globally, even in the Arab markets. If we want to talk about the public institution, it's even worse. We stand at 5.3%. So we've conducted a research on 55 institutions in Lebanon. So we're talking here about 275 board seats, and only 14 go to women. Only since 1950 till 2024, only 2 women in Lebanon were able to make it as chair and as vice chair. So we're trying to change those numbers. Thanks.
Thank you, Corine. As part of LLWB as well, I'm very proud of the work that we're doing. Michael, to you. Michael Abed Noor is the managing director of BOB Finance. He has over 15 years of leadership in Lebanon's financial services sector. Michael holds an executive MBA from AUB and a master's in economics and marketing from the University of Reading, UK. And he has played a key role in driving innovation, growth, and financial accessibility through BOB Finance. Michael, very happy to have you among us. Please tell us more about yourself and BOB Finance.
Thank you, Yusr. Nice intro, by the way. About myself, in a nutshell, I have been in this industry since 2007. and with Bob Finance since 2009. So here I'm an example of an easy startup. Let me tell you why easy. Because I got the funding easily. Bob Finance, as you might know, is owned by Bank of Beirut. So although it was a startup, today I cannot say that we're a startup, but we used to be a startup, we were funded by the bank. This is a real example of revenue-based funding. So I had the startup experience with all what comes with it. So it's challenging, it's not easy. I know what most startups go through, but in a more rigid and difficult way because we have a board to report to. So we started Bob Finance. I started Bob Finance in 2009, so we've been there for 16 years. Today we're a major player. We first started as a traditional money transfer company, and we evolved and changed. Today we proudly call ourselves a fintech. Now Lebanon is a very appealing market for fintechs, so we're in the right place at the right moment. Unfortunately, with what's happening in the country, we faced a lot of challenges. Today, I can say that we're in a very good place, although politics do not always help, regulation do not always help, because we're in a very regulated market. We are one of the companies that abides strictly by regulation, and this is why maybe if you're following what's happening, the name of Bob Finance was never mentioned in a bad way. So I'm proudly the managing director of Bob Finance, and we have a long way to go.
Thank you, Michael. Christophe, to you. Christophe Khoury, he is the operator that VCs and founders call when bold ideas risk falling flat. He leads 2 key initiatives. Through the entity, he helps transform funded ventures into scalable outcomes, bridging the gap between capital and execution across startups, SMEs, NGOs, and impact-driven projects. And through the collective, he's working to align Lebanon's top builders, academics, and community leaders to turn fragmented efforts into national momentum. Chris, you bring a very rare mix of system thinking, human psychology, and a relentless execution to the ventures that you work with. Tell us more about yourself, about the entity and the collective.
Okay, first of all, thank you so much for organizing this, guys. To those who know me, they know how invested I am in community efforts, and to see this in specific come into fruition, يعطيكم ألف عافية لكل حدا عم بحضر فيه. Second, I'm kind of obsessed with the human brain. I have a thing for human psychology. I don't have any degrees, I don't have any certificates, it's just a hobby, if we want to call it a hobby. So after around 10 plus years of working with founders, CEOs, leaders of NGOs, I realized a very, very, very big gap in the market, which is كل هول الfounders, every single one of them, at any given point in time, they're facing a marketing issue, an operational issue, a technological issue, a cultural issue, or all of the above كلهم نفس الوقت. And then another part of the problem is, whenever they try to seek help, those service providers don't really provide a service. They just chat GPT their way into a strategy, they give it to them, بياخدوا مصاري وبيفلوا. I'm not going to generalize over everyone, but this has been the case I'm personally seeing. So I thought to myself, okay, why not start providing end-to-end executive and execution solutions to the VCs, the entrepreneurs, and the founders who struggle the most with that. Thus came the entity. And as you might notice, I'm not really good with naming things. So if it's an entity, I'm going to call it an entity. If it's a collective, I'm going to call it a collective. Which brings me to the second point, the second gap. Around 5-6 years ago, we started facing a big negative season in Lebanon's life. And this led to a lot of the resources in the country to leave the country. So the software community started struggling big time. And by community, I'm not talking about the communities themselves. I'm talking about companies, schools, universities, founders. Everybody was struggling. And I love talking to people. I love figuring out what's going on with these people. And something became very evident. For the most part, we're almost all facing the same problems. And the solutions would somehow be related to one another. But everybody's banging their head against the wall on their own. We don't know how to unite. We don't know how to put our hands together. Thus came the collective, which is a collective of Lebanon's masterminds, well-intended masterminds who really want to make a positive impact. And right now we are a collective of academics, private sector CEOs and founders, NGO leaders and community leaders on a mission to genuinely start driving the country toward a national narrative that continuously and constantly upskills and expands the reach and the potential of Lebanon's resources. Because, and some people call me racist for that, I will proudly take the name tag. We possess, as Lebanese people, a tremendous amount of potential that is currently not being guided. It's not being focused. It's always dispersed into a survival, fight or flight kind of mechanism every single day. So the collective is on 3 missions right now for the year 2025. The first mission is to start gathering data, analyzing data, and releasing that data back to the community so that we start making data-driven decisions, well-informed decisions, instead of relying on ابن عمي شو خبرني وعمتي شو قالت لي, because this is how we make decisions right now. The second one is upskilling our community and resources. So everybody has technical skills, but the non-technical skills, the interpersonal skills, we're not very well versed at that. So we are coming up with a national curriculum to help software engineers become genuine, solid software engineers that can function in any market in the world, not just Lebanon. And third, which is the most important part for me personally, which is the dearest to my heart, every single one of these events, PowerX and other than PowerX, happen in Beirut and Mount Lebanon. And we always forget that Lebanon spans further than just this geographical location. We have amazing people in the Biqa. We have amazing people in Tripoli and Akkar. We have amazing people in the south. And every single inch of Lebanon has beautiful, beautiful resources and brains that have not been discovered yet, who feel left out, and let's face it, they are kind of left out. We're not investing in them. So the third mission of the collective for the year 2025 is to start expanding community efforts towards these geographical areas. And finally, one last thing about myself, I really don't take things too seriously. I mean, thank you so much for this, but I like humor, I like joking, I like talking to people, so I'm probably not going to do it today, but keep that in mind. Thank you so much, Yusr. يعطيكم ألف عافية.
Thank you, Chris. You got me very interested and excited about the work that you're doing with the collective. Yehia Khoury. Yehia Houry is the Chief Programs Officer at Flat 6 Lab. I think we're all familiar with Flat 6 Labs, one of the most active early-stage VCs and accelerators in the MENA region. They invest in entrepreneurs with cutting-edge ideas. He leads the design and execution of startup programs that guide founders from day one to demo day, helping them build strong investment-ready businesses. With over 15 years of experience in venture capital and startup support, Yehia has worked across the emerging markets to back technology-driven solutions. He holds a computer science degree from McGill University and a master's in international affairs from Columbia University. Yehia, very happy to have you among us. Please tell us more about your journey in Flat 6 Labs.
Thank you very much, Yusr, and really great to be here. I'm Lebanese by birth, never had the chance to actually live in Lebanon. Well, I haven't been here in close to half a decade, so I really want to say thank you to Beritech for giving me an inspiring reason to come here today, so thank you. Flat 6 Labs has been around for close to 15 years now. We have $100 million in assets under management across the MENA region. We have operations and activities that support entrepreneurs and entrepreneurial ecosystems across maybe 15 countries from the Middle East to Asia to Africa. And essentially we support, like Yusr was mentioning, we support anybody from entrepreneurs from day zero all the way to growth stage, and we invest in seed and pre-seed. And we have close to close to 500 investments across the region. And so we used to have a strong team and a great office and a fund in Lebanon a few years ago. Unfortunately, we had to severely throttle down our activities here because of everything that was happening. We managed somehow to continue investing and supporting Lebanese entrepreneurs through our Mashriq fund that's based out of Amman. I would love to be able to do a lot more for the Lebanese community, both in the country and outside. I think as somebody who's always been in awe with what a very small country can achieve, I think we owe it to ourselves to really try to support the Lebanese entrepreneurs wherever they go. Flex Labs really supports not only entrepreneurs, but we also support ecosystems. So we actually provide advisory to governments, but we also do capacity building of other ESOs and SSOs. We've helped in some certain cases in some countries. We've actually helped support the creation of angel investment networks, and we also help on the talent side. So we really kind of take the entrepreneur kind of as a center point and then see to what does the entrepreneur really need to succeed, and we try to kind of work with partners to palliate to all of those. I think maybe my last note before I pass it on to my next panelist is to say that the way our vision is, and I think I like the word term emerging markets, is that I'm realizing that entrepreneurs across emerging markets really have a very similar experience as opposed to just focusing ourselves to the Arab world. And I know that there's a lot of Lebanese, both in emerging markets and in maybe more advanced markets, and I feel like I would love to be able to capitalize on our diaspora to be able to do more together and to build bridges across the different regions. Thank you.
Thank you, Yehia. Last but definitely not least, Rimbo Abdallah, who is the director of Endeavor Lebanon, where she works closely with high-impact entrepreneurs, offering mentorship, strategic guidance, and access to a powerful global network of support. Reem brings over 15 years of experience across venture capital, startup advisory, and real estate, both in Lebanon as well as Europe. Reem began her investment career with MEVP. She led Eureka's crowdfunding operations in Lebanon and has worked hands-on with F&B Ventures, managing everything from fundraising to franchising negotiations. Can you tell us more about yourself as well as Endeavor?
Thank you, Yusr. Very happy to be here. Hi, everyone. So, I've been working for 15 years in Lebanon in the startup ecosystem, whether it be in VC or a startup. And I've been working for the past 6 years with Endeavor. So for those of you who don't know Endeavor, Endeavor is a global NGO that's present in 45 markets. And our objective is to support high-impact entrepreneurs that are at the growth stage. Because initially, we realized there were a lot of incubators and accelerators in emerging markets that support earlier stage companies, and there was really a gap for growth stage companies. How do you take a company from $1 million to $20 million in revenue? So that's where we come in. Ever since the economic crisis and everything that's happening in Lebanon, we realized there was also a need to support earlier stage companies. So we created a scale-up program where we support earlier stage companies in Lebanon. So Endeavor is focused on the multiplier effect. So our goal is to support those high-impact entrepreneurs because we truly believe that they multiply their impact in the local ecosystem by reinvesting in the next generation of entrepreneurs and mentoring the next generation of entrepreneurs. The services we support are obviously access to a global network of mentors, and access to markets in our 45 markets, and to a network of peers globally. We also have Endeavor Catalyst, which is our fund based out of San Francisco. So Endeavor Catalyst today has $540 million in assets under management. It's a co-investment fund, so we don't lead any investment, we just follow a lead investor, and we can invest up to 10% of a round, and up to $2 million for every single round. What Endeavor Catalyst also does is that when one of our Endeavor entrepreneurs, so to become an Endeavor entrepreneur, you have to go through a selection process. And when you become an Endeavor entrepreneur, Endeavor Catalyst also, if you need help in fundraising, we can review the deck, the financials, organize mentorship calls with global investors for you to perfect your pitch. And then we introduce you to investors worldwide, be it in Europe, in US, in the MENA region, in Asia. This is where we have offices. And So far, Endeavor Catalyst has invested in 360 companies. We've seen 30 exit in 35 countries, and we also have 63 unicorns in our portfolio. Thank you.
Thank you, Reem. Yani, as you can see, we have a really impressive group of panelists with us today, and we're going to dive right into investments. Corine, many founders, and me being one of them, especially in Lebanon, are very hesitant to approach institutional investors and VCs. They're viewed as overly aggressive, sharks, all of this terminology. As someone who has led fund management, and IM Capital and others, how fair do you really think this perception is? And what advice do you have for founders?
It's very fair, don't go. If you're scared about going to a VC, so you're not ready to face those people. So let's go back to the core. What is a VC? It's an investor that is investing other people's money for at least a 30% return year on year. So this is by job description. So if the startup does not obey those performance indicators somehow, the investor will not invest in it. So this is rule number one. Number two, never approach one investor, approach 3 investors. And I tell you, you mentioned control. So if the VC, by description, the VCs don't like to hold a big equity stake. Those are not private equity people that go into an SME, acquire majority stake and try to change the management. A VC is not, this is not the job description of a VC. So if the VC is taking an equity that you think is unfair, or somehow the 3 VCs gave you exactly the same valuation, so apparently this is how much you're worth, I'm sorry. So apparently you are asking for more money than you have created. So if you're there as well, don't approach those institutional investors. And if you want to talk again about, control, a VC, investing, having an angel investor or an investor or a venture capital, it's like, a dating app that ends with a marriage, with a pre-agreed divorce. So this is what it is. So control, you're not losing control, you're just sharing control, just like in a marriage. Thanks.
Thank you, Corine. Now, the reality is VC money is not the only option that is available, though it tends to dominate a lot of the conversations. But it is, as Corine said, might not always be appropriate or even accessible to some founders and startups. Michael, what alternative funding paths do you believe more startups in Lebanon should start exploring, especially as they mature?
Unfortunately, in Lebanon, this is my view, VCs are underdeveloped. And this has a reason. I mean, we're not offering them anything attractive, anything sexy. By this, I don't mean the startup per se. I mean the country. I mean, we've been through a lot of instability, economic, financial, you name it. So, and access to global capital markets for Lebanese startups is very limited. I see several alternatives. First of all, as a startup, you need to know, are you willing to give up equity or not? Now, if we're not giving up equity, you have the traditional way, which comes at a huge price, which is the debt. So you can ask for a loan, which today are very, very limited, and if available, are super expensive. So let's remove this, for now at least. You have the grants. As we know, you have the EU, you have a lot of international organizations such the EU, the UN. We used to have USAID, hopefully it will come back, and many other players. And my preferred one, when you're not giving up equity, is revenue-based financing. Here I would like to give an example, Yusr, if you allow me.
Yeah, sure.
Because this is something we did together with you and Wakilni. As Bob Finance, we decided to partner, to collaborate with Wakilni And of course, we did not do this for free. We're expecting revenues from this partnership. So this is a real example that's being implemented right now as we speak. We have our technical teams integrating. We're offering our wallet as a service to Wakilni customers. So this, for me, is the preferred way given the actual situation in Lebanon. Now, if you're giving up equity, I'm not going to tell you the story. I'm sure you all know about crowdfunding, seed funding, this angel investor, which usually when we talk about an angel investor, from what we saw and what we have experienced in Lebanon, comes from the diaspora. So these are the main things that would be interesting as an alternative to VCs.
Thank you, Michael. Thank you for using the stage to announce the collaboration between BOB and Wakilni. Chris, in your work, you stress that sometimes startups don't fail from the lack of funding, but from lack of execution. So what comes first, in your opinion? Is it funding or solid execution? And how do you advise founders to break that cycle when things seem urgent?
What comes first is mindset. It's neither execution nor is it funding. So are you going into that venture because you have a nice idea that you want to see come to fruition, or are you absolutely dedicated and will stop at nothing until you see it come to fruition? These are two absolutely different mindsets that will give absolutely different results. And I've worked with so many people to the point where I can now very quite intuitively choose not to work with someone because I know they're doing it as a hobby. It's for fun. So to answer your question directly, Yusr, what comes first, execution or funding? For me, it's going to be execution because this is what materializes your mindset in the first place. If you're not willing to, مثل ما بنقول بلبنان نوسخ ايدينا بالوحلات نحن as founders, if we're not willing to dive deep into that pit hole and swim in it and come out of it, take a shower, go to sleep, wake up the next day and do it all over again, if we refuse to do it because we are the founders of a company and we have employees and we want to advertise that we have employees, it's not going to work. So I'm going to keep it short and sweet because I think there's a lot of questions to be answered. I don't think I want to philosophize the answer to this one too much, but mindset, execution, and then think about the money. Thank you.
Yeah, I love that. Thank you. Yehia, in your experience, what role do accelerators and incubators play in setting startups for successful fundraising?
So, of course, incubators and accelerators have slightly different roles, but for the sake of this question, I'll lump them together. The way I see it, startup support organizations really have three main pillars that they would like to address with entrepreneurs. The first one is that they help fill gaps that the entrepreneurs have. The entrepreneurs typically are people who identify a challenge and they say, I want to solve that challenge. They may not be the best people to solve that challenge, but the fact that they're driven enough to say, I want to be the one solving this, for us as investors is enough to say, you should actually take on that challenge. However, that also means that they may not have necessarily all the best assets. And by that, I mean either the best expertise, or the best talent, or the best product in order to actually solve that challenge. And so we're here to kind of help them. So we train them on certain things. So if they're very, very good technically, but maybe less good on the branding, marketing, we actually help them on the branding and marketing. If is a lacks, they actually are much better at the sales, but their technology lacks a bit of stability, then we actually help them on that. And that's really kind of the first pillar where we become their partner to make sure that they have a very well-rounded, a company or project in order to actually make it fundable. The second one is that I like to call it, we help clean up their house, meaning that, a lot of them, they start a company, like they incorporate a company, either with a brother, with their sister, with their mom, and investors don't like that. They're like, okay, so we sit down and we say, okay, so who is on your cap table? What does it look like? Let's make it as investment ready as possible. And so we clean it up, we bring in the right founders. Some founders, for example, don't have equity, and they're like, yeah, I was planning to give them equity. I'm like, okay, if you actually really do want to give them equity, let's do it now. We bring in lawyers, they help do that transfer of shares. We help clean up their product. So a lot of them, they're good at listing features, especially the real techies. They see their product in terms of a real product. They don't see it as this is a problem that I'm helping you solve. They don't, so we really help the entrepreneur kind of customize their pitch and customize their entire UI, UX to make sure that it's very friendly to the customer and attractive to the customer. And finally, we help open doors. And I think that's where the term acceleration comes from, is that they could actually go and, let's say, make a partnership with the biggest telco in the country. They could actually go and do a partnership with a big corporate or with the government or with whoever. Or they could actually go and knock on the doors of investors. But we all know that without the right contacts and without, let's be honest, without somehow of a stamp of approval, it will just take you that much longer to get to where you need to get to and to get to the decision makers. And so at Flex Labs, and I know that other incubators and accelerators do the same, and I think, having worked with Endeavor entrepreneurs very closely, I have a lot of admiration for the work that you guys do. Endeavor and Flex Labs have tremendous networks that they make available to the entrepreneurs, where instead of actually going to the lowest level of the ladder to actually kind of try to get somewhere, we say, listen, we'll connect you to the top person, we'll prepare you for the meeting. That top person knows that you're coming vouched by us, and that way we just kind of shorten the time that have taken you to do and to accomplish the same thing. So it was a very long answer, but
But I totally agree. Like the openness to networks and the access to networks gives a lot of leverage and setting up for success for the startup. Thank you. Reem, you've seen many founders successfully be able to raise capital, but not all of them succeed at scaling. So what do you think separates a fundable company from one that is truly ready to grow sustainably in Lebanon and beyond?
Initially,
Hello.
Okay. So initially, when you want to raise funds, investors will be looking at the vision of the company, the market opportunity, and you as a founder, because they invest in people initially and your ability to execute on that vision. But in order to scale a company, what's really, truly important, and number one, is execution. And having a strong leadership team, a strong tech infrastructure, a strong culture, that will help you scale a lot the company. Another aspect for companies in Lebanon, you really have to have a regional or a global mindset. So in order to raise follow-on rounds and scale your company, investors will need to see a proof of concept, be it, today we're seeing a lot of companies expanding into KSA and to UAE. And honestly, based on the last financial reports in Q1, 60% of the investments were made in KSA and 30% in the UAE. So they would need to see a proof of concept in these markets or other markets outside Lebanon. Another key component is really understanding your unique unit economics and financials. So this is really key. We had a call with a founder of a very large company. He's a tech guy, he's an engineer, and the first thing he told us is that at a later stage of company, it was a hurdle for him to really not understanding and getting on top of his unit economics. So he started studying that and working on it for 6 months to really grasp every single notions of financing of the companies. And you really need to know when to basically invest the money that you have and when to actually set, I'm going to pause now and focus on other things. So these are really important. And in order to scale, last but not least, you really need to be obsessed about your customers, understand their pain point, pivot if you need, iterate your product to really cater for their needs. And in order to grow, because this is something we've seen a lot, and as Yehia mentioned, you really need to have a good cap table. Okay, so you need to be careful initially at the early stage who you let into your cap table and which investors you attract. If you get to Series B or Series C stage with a cap table where you end up owning 7% and you have 3 large investors, it might be very difficult to raise funds at a later stage.
Thank you, Reem. I couldn't agree more about the unit economics, and I share the same view with the founder that you mentioned. For me, it was also one of the things I had to squeeze myself to learn, but it makes a very big difference. Corine, you've evaluated countless startups, and often under a lot of uncertainty. Has there ever been a time where your gut feeling told you something, but the data told you something else? And how do you personally balance this between like the instinct and the data-driven decisions?
At any venture capital firm, there is a clear corporate governance. So it's never about what I feel or what I want. And you know, in early stage, probably when a startup is less than 3 years old, we don't talk about a gut. We like to call it an educated guess. And really, you know, it's still an idea and it's very early to judge. Usually for companies that are more than 5 years, khalas, you know, somehow the past will predict a little bit unless we have a major shift in product or in team. So the background, well, the history will predict a little bit what's going to happen the next few years. And here there is no guts, it's only data.
Thank you. Michael, you come from a very structured environment and where you value a lot sustainability and measured growth and, you know, data and graphs and all of that. What are some financial signals that make a startup stand out as fundable and outside like the typical standards of VCs?
Tell me about structure. I can tell you a lot about it. Yeah, I come from a very structured environment, and we've learned how to adapt. Now, you know, the VCs usually they look at the total addressable market. This is their first and main concern, one of their main concerns. Now, if you want to be a bit more flexible and look at it from a corporate or private investment point of view, I would look at several things. First of all, what's very important is the cost of customer acquisition. First of all, let me start, sorry. There's something more important that's not really financial that I would like to mention is the value proposition. What are you offering? You should know what you're offering. What differentiates you from your competitor? How can you shine in your industry, in your field? What's the product? This is very important. Now, of course, it has an impact on financials, but it's not purely financial. I like to call it the packaging more than anything else. So this is really important. Then you have the lifetime value of your customer, which is correlated somehow to the cost of acquisition. Now, many of the examples I'm giving, since I come from the fintech industry, are related to digital startups, fintech startups. But they also apply to any other type of startup. What I mean by customer acquisition is how much should I pay to acquire this customer? Let's say I pay $10 for a person to download my app and start using my wallet. What would be the lifetime value of this person? How much money will I be making out of him and for how long? So this is really, really important to us. The other thing that's really important is the customer retention. Everybody talks about customer acquisition, but customer retention is very tricky, very challenging, and can cost a lot of money. Customer acquisition is one shot, done. Retention, this is where you shine. This is where the value of your product is really demonstrated. So these are things that I really value. Now, coming from a structured environment, I cannot but mention the cash flow. We're not talking about P&L here, we're talking about cash flow. Whenever you see a positive trend in the cash flow, this would eventually reflect in a better P&L. So we look at the cash flow, of course. We also look at how structured the startup is in terms of processes. This gives an indication about who you will be dealing with. Now, last, there's one very important thing which is also relates to digital startups. It's scalability. This is the big surprise. Whenever you invest in a startup focusing on digital products, on fintech, or whatever else, scalability is really important, because I'm sure that if there are some tech peoples around, I mean, you know that you hurt us. You hurt us every time we want to add a product, we want to modify a product or develop something new. So scalability is very important to me. Thank you.
Thank you, Michael. Chris, now you work closely with startups to help them fix their internal chaos when it happens. But how many times do you actually have yourself to go into the fundraising process? And do you think that this process should be owned fully by the founders themselves, or can they outsource or use the support of someone from the outside?
It's always a case-by-case kind of thing. The general rule of thumb for me when it comes to founders getting started with a startup is try to build and nurture your in-house team as best as you can. Because at the end of the day, there are two challenges here. Number one, you need to make money. And as an early stage startup, you don't have any money in the first place. And number two, to pay the outsourced people or the contractors or they're gonna require a lot of money. And not all of them are gonna stay loyal to you. So at any given point in a startup's lifetime, you're gonna struggle, you're gonna go through months where you can barely pay your employees, you can barely feed yourself. All what you have to do is just drink some coffee and do it the next day. Contractors are not going to be happy about that. The thing is, I like to see contractors as task forces, mission-driven task forces. So if you want to hang on to them for a long period of time, you're losing your edge. You're going to become so reliant on them, and you're not going to be able to practically audit what they're doing, what they're not doing, because they also have their other commitments. So the approach I almost always prefer is a hybrid approach. So we are at a critical stage. We need to move from point A to point B as quickly as possible. We don't have the luxury of time of building a team, nurturing the team, training the team, etc., etc. Okay, cool. So we're going to go the other way. كمان cool. But we don't want to forget the fact that we're building a company and nurturing that company. So the hybrid approach when it comes to critical situations, when it comes to high stakes, when it comes to I need to deliver results and I need to deliver them fast, I would say outsource, and in parallel, start building your internal team.
Yeah. And this goes back to like the importance of the mindset of the person.
Definitely, definitely. And we need to keep in mind that oftentimes, and I've seen it so many times before, where I, the contractor, I'm the only one remaining at that team, not getting paid because first of all, I like to think of myself as loyal. Second of all, ماني جمعية مر منصور, but I see the impact and the potential that a certain company can do. And number three, I see that the founder would be fighting باللحم الحي مثل ما بيقولوا, and this makes me respect them and appreciate them so much to the point where I just want to give. So it all goes back to the mindset that is, if you start breaking down, you have one of two choices. Do I want to give up the marathon, or do I just want to catch a break, let my ego take the blow, because at the end of the day, nothing is happening except your ego getting hurt. Okay, let's cry in the corner, let's make sure it gets hurt properly, let's lick our wounds and pick yourself back up and get to it. So it's definitely about the mindset. And I can never stress enough. For me personally, and in everything that I've done within the past decade of me being in the market, for the people I've met, for the founders, for the advisors, for everyone, I think Mr. Shahade mentioned it in a sense. It's all about the mindset. It's all about the goal that you need to set for yourself. And you stop at nothing until you reach that goal.
Yeah, thank you. And building on that, and on the people element, how can Yehia founders start building and maintaining relationships with investors even before they start fundraising?
It's a very good question, and I think it's needed. A lot of people think that they don't need to approach investors until when they're actually ready to fundraise, and that's absolutely not true. Maybe to go back on the relationship between investors and entrepreneurs, I just want to ask a question to the crowd just to understand who we have. Who's an entrepreneur in this room? Okay, less than I expected. So we have like 20%. I'm going to let you in on a little secret for the entrepreneurs. Investors have a tremendous pressure to invest. That's their job. If they don't invest, they get fired by their LPs. And so even though investors may have a bit of a standoffish attitude sometimes with entrepreneurs. And I think I'm the first to be guilty of this. The reality is they need you as much as you need them. And the only thing that they would love, that investors would love is to actually meet an entrepreneur that ticks all of the boxes, whose house is clean, whose cap table is investable, that shows traction, that shows that they have a good team, that shows they have all the elements so that they can justify to their board. I mean, Corine mentioned that, we have these governance structures. I can't just decide on my own to go invest in a company. It's not my money. It's somebody else's money. And so we have this whole framework where I have to get approvals to actually invest. And so I want to make sure, of course, that excuse the term, but I cover my ass. And so by doing that, I have to actually show, there's, the IC memo, it actually shows that, yes, this startup actually ticks all of these boxes. And so I just want you to understand that relationship is really very far from being just one way. Priscilla, during her keynote, mentioned something I had never heard before, which is, treat a VC like you would treat your ex. And I like that. It's a strong image, I would say. I think it's more treat a VC like somebody you actually want to build a relationship with. And I think maybe it's a bit closer to what Corine had said, which is it's a marriage you're getting into where you already have an end date. And it's supposed to be a healthy marriage and a healthy end date. And so in order for that to happen, you have to stay top of mind for the investors. And so the whole idea is investors get requests for investment all the time. And so for this, whenever you meet an investor at a conference, you say, hey, listen, if you don't mind, I'm going to send you a monthly update. I'm not fundraising right now, but I would love to share with you some of my updates. If the investor doesn't read them, somebody from their team will read them. And people start tracking you, for years until you're actually ready to fundraise, until they're ready to actually invest in you. So I would say absolutely the first thing you should do is, one, get in touch early. Say, listen, I'm not looking to fundraise, but I like your portfolio. So definitely, look at the investor's portfolio. They're all available publicly. So you actually understand what they're investing in. If they're investing in all fintechs and you're an ed tech, he will not look at you. It's just not part of their mandate. It's not that he doesn't like you. He may love you, but it's not part of their mandate clearly because you actually look at their portfolio on the website and there's no ed tech there. If they're more B2B instead of B2C, same. If they, so all of these things, I think you have to do your homework and you really have to kind of you can ask questions, of course, to the VC, but they like it when you actually do your homework first, where you understand who they're willing to invest in or who they're allowed to invest in. Two, to get in touch early and be deliberate about the communication without spamming them. So, I think once a month is a very big maximum. If you don't have a lot of updates at the beginning, do it once a quarter. And then when you're actually ready to invest in them, just pull the trigger and say, hey, I'm ready. Can we sit down and discuss? The second thing, and I think it's important, is most entrepreneurs are trying to solve a problem that typically is a niche problem. Become a thought leader in this. I know you're really, really busy working on your product, on your teams, trying to keep the boat afloat, firefighting all the time. But take a bit of time, come to these conferences, say, I would love to speak about my topic, and be public about it. Share your problems, share your solutions, and I think people actually, they will appreciate you for it. And again, you become top of mind. Yeah. Imagine an investor has, 500 applications on top of them. And, every day they actually are able to take the top 5. And so if you're able to constantly, in different ways, keep putting that file on top, automatically you should have a higher chance of actually getting investment. That would be, I think, my main insights, and to really have to build a relationship with the investor to ensure that you have the outcome that you want. Thank you.
Thank you, Yehia. Very insightful. Reem, there's the dilemma of that founders face a lot of times. They have limited time, limited resources. What should they be spending their time on, operations or fundraising, and when to know what their main focus should be? So when you coach businesses through Endeavor, how do you help them figure out what they should be focused on and when they should be raising again or more focusing on the execution and operations?
Of course, before answering that question, I really want to say that what Yehia said is really, really very important because it's a relationship that you build with investors. And this is one point that I wanted to mention also, is that they might not be interested today and they receive 1 million decks a month or in a year, And if you don't stay on top of mind, they will forget about you. So those emails, those monthly emails are very important. And not only to investors, but also to your key stakeholders and to your customers. You never know who they might introduce you to. So this is really key. So I don't think you ever stop fundraising, but you might allocate 5% or 10% to your time building those relationships and keeping investors on top of your company and the progress you've made. It's amazing if I saw that, okay, last month I did this and the next month I launched this product, I have this traction and I have all of that. Now to answer the question, entrepreneurs really need to look at the runway of their business. And typically, I mean, you need to have, it depends on every stage of the business where you're at, but you need to have at least 12, 18 months of runway. And something that's really important that some entrepreneurs make the mistake is that they start fundraising when they need the money. It actually takes at least 6 months to a year from the moment you approach an investor and they're interested to actually closing a round. Because there's due diligence, they need to look at your data room, then there's the legal due diligence and all of that. So it actually takes time to fundraise. So you need to take that into consideration. Once you have enough runway, you need to see, will this cash that I have today allow me to reach the next milestone? And if the answer is yes, you can pause a bit the fundraising activities. And then you can also ask, you need to ask yourself this question. If I raise funds today, what will these funds unlock? If it's a new market, if it's launching a new product, if it's investing in tech that will allow me to scale and reach a lot of customers, then by all means raise the funds. One last point I wanted to mention is that you also have to look at momentum. Sometimes you have enough cash. I saw in another company, they had enough cash and they had enough runway. And this was pre-COVID area. But the investor appetite and the momentum was really good. Like you had a very high valuation, you had a lot of money that investors wanted to invest. And she ended up raising that money without actually needing the money at the time. But then COVID happened and money dried up and there were no investment and valuation went up. So she actually did a pretty great thing because it allowed her to survive all these years and to actually grow the company in tough times.
I really like that, and I liked what you said, because we always say that. When we're asked, are you fundraising? We always say we're always fundraising. It's just the amount of time that you're putting into that. Thank you, Reem. I'm going to circle back to you, Chris, and talk a bit about the pitch part, because there might be a misconception, or we're taught that it's all about the elevator pitch, and if you deliver that jaw-dropping pitch, this is all it takes to actually get the investments. But from your perspective, is what is beyond only like showing exponential graphs and just the pitch itself that signals a strong startup that deserves the funding?
I personally hate frameworks. I hate guidelines. I hate trends. I hate everything that has to do with them, with every fiber of my being. Not because of anything, but because they work for a specific use case. And we put in a lot of marketing to elude everyone that this is what you need to do to get your fund or to do whatever. Now, I'm not an investor, but I've interacted with a lot of investors before. And I think as a founder, it's not about the elevator pitch and the curves and the tables and the unique selling points. Those are very, very important, but this isn't what's going to sell your startup or your equity to these investors. And I think this is just a very simple but also complicated sales kind of strategy, because when you're positioning your product or your services into the market, whether as a B2B kind of thing or a B2C kind of thing, the most important sales element is how can you connect with your end user, with your target audience on an emotional level to give them what they need on an emotional level. And it goes back to the same principle when it comes to investors, in my opinion. So what am I going to give that investor as a reward if they invest with me? So a subset of investors are going to focus on the money, on the revenue, on maximizing your ARR, your MRR, all of these nice words and terms. But other investors might want to feel some sense of impact. Other investors may want to feel some sense of humans benefiting from what you're doing. So it really depends on the investor themselves, on the group of investors. And I think you mentioned it a few minutes ago. You want to appeal to their target audience as well. If you're an ad tech kind of startup and you go to someone who's focused on fintech, no matter how good your elevator pitch is, it's not going to elevate anybody. So it's all about your target audience. How can you connect with them? How can you make them feel the things they need to feel to connect with you in return so that they give you their money?
Thank you, Chris. Corine, back to you, and I want to touch upon the gender angle. And now, as the president of LLWB and a founding member of the Lebanese Women Angel Fund, you have been one of the remarkable women that are deeply involved in building more inclusive capital ecosystems. But what structural or cultural shifts do you believe are still needed so that we shift from just talking about, supporting women founders, etc., to actually it being like a theme, equity as a norm, basically?
The day we celebrate equity as a norm is the day we should stop celebrating International Women's Day and stop doing those closed meetings of, having girls and a mentor saying that you can do anything, because I don't see rooms full of men with someone telling them you can become anything you want. So I'm sure that's going to be on the same day. But, let's talk a little bit about the unfortunate reality of Lebanon. So today, obviously the vibe is positive. We have, a new government and Badkounia. But, reality is still unfair. We're talking about an unemployment rate that is higher than 40%, out of which only 28% are a representation of the women workforce versus 70% that of men. What does it mean? It means that every year you have 100 girls and 100 boys that go into university. They graduate at the same time. The worst part is 47% of those girls would actually graduate with higher education. However, when they reach the workforce, 70% of the boys go into the workforce. For the women, it's only 28 out of 100. So the OECD, the CNRS, the UN Women did a beautiful exercise in 2023 to try to see what is the main issue, why only 28% are going into the job workforce. Obviously we had plenty of reasons to talk about the motherhood penalty, to talk about, the social norms, فيك وما فيك وجيب لله وما بقدر وما بقدر, those are themes that we should forget. And I believe even motherhood should change to parenthood. خلاص, it's, this is the new norm. But to keep talking about, entrepreneurship and startups, the two main reasons that were flagged were one, women and girls are in the wrong sectors. So today, 71% of girls are into education, arts and science, and the soft skills. And only 29% are into ICT, while, the jobs of tomorrow are, the green, the tech, the AI, We need to encourage women and girls to go into the new era about the jobs of tomorrow. That's core. And two, entrepreneurship. We need to encourage and celebrate women entrepreneurship. In Lebanon, only 8% of women are entrepreneurs, and 17% only of those 8% were able to access finance in 2023. Today, it's less than zero, obviously. So, access to finance is as well keys. So educating women and giving them access to finance are, the core of changing this society.
And I also want to salute the work that LLWB is doing for encouraging more women on boards as well, because it's very important to have more women in leadership positions so that they also support the journey of women to get there. Thank you, Khoury.
So it's women on boards, not in C-suite position. I know the strategies are set by the board of directors. We need the women to be on the board of directors to set the strategy for that the C-suite level execute those strategies. This is how far we want to push it.
Michael, excuse my upcoming question, but since 2019, the trust in the Lebanese financial sector was shaken. And entrepreneurs and a lot of startups also feel that maybe the financial sector is disconnected from reality and too slow, too risk-averse, etc. Now, from where you sit, and I think you already gave an example, but what do you think are additional real opportunities for collaborations between startups and financial players like BOB?
First, allow me a small parenthesis here. Please send a woman to us. No, I mean it. At Bob Finance, they all know that I have a preference for women in the team than for men. And I'm really sorry for the team members, the men that are here. But I'm a fan of women in business, more meticulous, more serious. Okay, that's it. You won't get anything more from me. Now getting back to your question. Yes, 2019 was a turning point in Lebanon. And as we all know, the banking sector and what came with it, and we'll not go into details. And it's becoming, they became, I would say, outdated. I'm sorry if there are any bankers here, or if somebody from any bank will hear this, but again, let me remind you that we are owned by a bank. But I'm a realistic person. Banks in Lebanon are outdated. They are trying to adapt to this gap that they faced between 2019 and 2024, because this is when we started feeling that the banking sector woke up, or at least tried to wake up. They're still trying. We can see now some banks that went digital. We can see some banks that are still trying to become digital, whereas companies like Bob Finance started this journey in 2017. There's one thing that bankers are not understanding. It's very simple. The audience today is a young audience. The audience today, the startups and any other new entity, are usually, the decision making is usually under 40 years old. They don't want to go to a bank. They don't want to go to a branch of a bank. They don't want to sign papers. They don't want to go through what we call a KYC. Although we have to go through the KYC, but we have relabeled it. We do everything digitally. We onboard digitally. We have a digital onboarding system, whether for companies or individuals. So unfortunately for us, fortunately for you, we don't get to meet. We just shake hands digitally. So this is a start. Then there are things that are being done today that banks cannot or do not want to do. We have these collaborations that we do. We have these co-branded products that we do. We partnered with major professional orders in Lebanon. I'm not going to name them, but big professional orders. We issued co-branded cards for them. These co-branded cards are linked to the wallet that we offer to these orders as a service. So the actual user is not downloading my app. He's only onboarding through my platform, but he's using my wallet as a service on the orders platform. So there are many things we can do. There are many things that we are doing, but unfortunately, technology is so fast and so expensive. So we always feel that we are running. But in a nutshell, there are many things we still can do. And again, we are very active on this front as BOB Finance. And I can notice that in this industry, everybody is really moving really fast and quickly.
Definitely the upcoming fintech. Thank you, everyone. I think we overran our time. I'm sorry for the time, and thank you to all our panelists for this very interesting conversation and answers, very insightful, and thank you to our guests. Thank you.